Good morning or good afternoon, everybody. Thank you for tuning into the webinar today. It's going to be a relatively short affair, around about half an hour to 40 minutes of me talking. Trying to keep it relatively concise and to the point. I make it quite practical without going into too much technical detail and depth. Just looking to give you a good overview about business continuity planning, why it's advantageous to consider it, what the benefits are of doing it, and how to go about implementing it in your business, because quite a few people have intentions to get involved in this, but just aren't sure how to go forward and therefore never actually do anything about it. So we're going to talk about that. And we're going to talk about what you do once you have your business continuity plan set up, how you go about managing them on an ongoing basis. And we will take some questions at the end, or indeed we may stop during the course of the presentation if people are putting questions through in the question box. We deal with those at some point, either during the presentation or at the end. Right, a quick introduction to Sutton Winson, because whilst some of you may be Sutton Winson clients, we know there are some of you registered for this webinar that are not. Sutton Winson are an independent insurance broker covering commercial and personal lines, established in 1955 and now employing around about 120 staff across 3 offices in Twickenham, Burgess Hill in Sussex, Petersfield in Hampshire. And whilst our primary business is insurance, we are now offering a range of risk management services designed to help our clients control their insurance premium spend, control their claims experience, and also to try and control the losses and risks that fall beyond the scope of insurance. So we're involved in things like health and safety, a little bit of HR, business continuity, motor fleet risk management, supply chain risks, to give just a few examples there. Quick introduction to myself. I've worked in the commercial insurance industry for over 20 years now, a combination of working for insurance companies and in an insurance broking environment. I've got 15 years experience here at Sutton Winson, and in the last few years have been working in the role of risk manager, delivering some of these risk management services that I've just mentioned. I'm a chartered insurance broker. I'm also a holder of the NEBOSH National Diploma in Occupational Health and Safety, and a technical member of the Institute of Occupational Safety and Health. But crucially, for the purposes of this discussion today, I'm certified by the Business Continuity Institute, and I work to their good practice guidelines to make sure that the way we go about business continuity is correct and fit for purpose. Right, so our business continuity planning services at Sutton Winson fall into 3 parts. We have the ability to undertake a full project with clients who wish to set up a business continuity management program from scratch, don't really know where to start, don't know what resource they need, don't know how to go about it. We effectively hold their hand from start through to finish, with the output being a full set of effective business continuity plans. And I'll be outlining in this webinar today what the component parts of that project are and what's involved, to give you an idea of the sort of commitment that's required from you and the sort of resource that's needed to go about that process. Equally, for people that have already got some form of business continuity plan in place, we offer a full audit for those with a pretty comprehensive system in place already. We go in and spend a day talking to members of the business continuity management team, having a good look round sites and trying to identify any pinch points or areas of weakness in the planning process. And if all's in order, we give our sort of stamp of approval at the end of that, or we might make some recommendations. For perhaps the smaller business that hasn't got much in the way of an established set of business continuity management plans in place, we offer a sort of a desktop review, if you like, where we go in and just spend a couple of hours reviewing what is in place and giving a few pointers as to how it could be improved and how it could be done slightly better or slightly differently. So the first question I'm going to put out there is why should we bother with business continuity planning? What are the reasons, the business reasons for actually doing it? Okay, to kick off from the top of the list there, increase business resilience. Simply put, having business continuity plans in place will help a business to recover from a disaster, as staff will know what to do in advance and should be able to react more quickly as a result. And this is going to give you the best possible chance of making a full recovery from an adverse event, and thus it will protect the interests of shareholders and the livelihoods of your employees. Secondly, it could give you an edge over the competition. Being able to recover quickly from an event will protect your market share as a business. If a business has a major incident, its share price will inevitably be affected. This is particularly relevant to larger PLCs, larger businesses on the stock exchange, as you can appreciate. Stakeholders of the business will want to be confident that you can fulfill your contractual obligations, and indeed interested third parties are increasingly asking for sight of a business continuity plan as part of a contractual agreement. Stakeholders, what do we mean by stakeholders? It's any party with an interest in the business. So that could be shareholders, it could be employees, it could be suppliers, customers, regulators. All of these people can be affected if the business were to go under, as it were. Next, we have corporate governance. There's guidelines issued by the Financial Reporting Council, the FRC, following the Turnbull report a few years ago, that require an organisation to have a clear strategy for dealing with significant risks. Now, the FRC requires directors of a business to consider the risks that it faces. These will include things like a major fire, serious reputational damage, could be loss of key staff, product recall, all things for which solutions would be considered as part of the business continuity planning process. Then we've got improved access to finance. Banks and other providers of finance will look more favourably on a business that's able to demonstrate that it has planned for a disaster, particularly since the credit crunch of 2008. Simply put, if you were a bank manager, put yourself in their shoes for a moment, would you not think twice about lending money to an organisation that had just experienced a major adverse event? They may well be suffering a reduction in turnover, increased expenditure, loss of customers and market share. In summary, there wouldn't be the best risk to a finance provider. Then we've got supplier relations in terms of credit. Suppliers are scrutinising their client base far more in light of increases in bad debts in recent times. Having a business continuity plan provides reassurance about your ability to fulfil payment obligations and may help you to negotiate improved terms of credit. Then we come on to uninsured costs. Your business interruption insurance, which hopefully you've all got, will pay for loss of gross profit or increased costs of working for a predefined period of time after an insurable event like fire, explosion, storm or flood. But it won't protect brand value, it won't protect share price, customer loyalty, it won't help you to retain key staff. And furthermore, business interruption insurance is limited by a period of time, usually 12 or 24 months. So beyond that, you're on your own effectively. So insurance can play a part, but it's certainly not a complete solution to continuity risks. Still on the subject of insurance, we talk about insurance premiums. Having an effective business continuity plan in place is viewed very positively by insurers, who may be persuaded to offer advantageous terms as a result. I think it's fair to say that in recent times we're seeing more pressure from insurance companies on their policyholders to start proactively planning for business continuity issues. We're seeing situations where insurers go out and undertake surveys with clients that they are producing risk improvement requirements or recommendations, and quite often we're seeing business continuity planning coming up there. So there is a bit of pressure now from insurance companies, certainly more than there was, say, 5 to 10 years ago. Sometimes we're finding there's some pressure from large clients, and by that I mean people that are clients of you guys, people that you are working for, may have expectations of you. They may want reassurance that you are a robust, resilient business. To give you a good example, I was working for a client in the advertising industry recently who have a customer, a very major customer, BT, who were insisting not only that they have business continuity plans in place, but that they actually achieved the business continuity ISO standard 22301 in addition. And we're seeing this again more and more now from pressure from clients to have these sort of plans in place. Incidentally, the ISO standard that I just mentioned there, ISO 22301, relatively new. It's only, I think, about 2 or 3 years old. If you're looking to achieve that standard, then you need to have your business continuity plan set up in accordance with the Business Continuity Institute's good practice guidelines that we at Sutton Winson work to. If you don't do that, then you are unlikely to be able to achieve the ISO standard. It's quite important that you go through the process in the correct manner. Right, so how to produce business continuity plans? There is a 5-stage process, which you'll see on the screen there, which I'm going to take you through now, bit by bit. To begin with, very first stage is, for me as the business continuity practitioner, to understand the business as best I can. And one of the first things I will look at is an organisational structure chart to understand how different departments and different people within the business fit together, how they support one another, in interdependencies that may exist, and how communication lines are currently set up. That's quite important. I'll also look at the latest report on accounts, and in particular the report section is of most interest to me because it tells me a bit about what the business is doing and what its plans are strategically for the future. I'll then interview people on the senior management team and people at the sort of general management level to find out about their own role in the business, what they do day to day, and what their perceptions are about the threats to the business and the business's ability to cope with those threats. You can establish quite a lot about people's attitude to risk just by talking to them. So that initial fact-finding is quite important. And needless to say, I'll obviously spend time going around the business and having a look at the processes and functions in practice and how the premises is set up and such like. And I'll sit down with my contact at the client and we will discuss and agree a project team to tackle the process, which ideally should be between 4 to 6 people, depending on the size of the organisation, with representation from across the business, not just from one particular area. It's good to have a good spread of people involved.